Welcome back to another episode of Keen on Australia. Today we've got something a little bit special. We've got Sandra here from Marlun Finance, and she's going to be talking about some new things in the finance world and what's happened recently. Hi, Sandra. Welcome back to the show. Why don't you tell everyone a little bit about yourself?
Hi, Darren. Yes, Sandra Crummer from Marlun Finance. I've been a mortgage broker for 13 years now. Um, Basically, have my own business, which I set up in 2017. And it's run by myself with the assistance of my son, Lucas. So, for any of the clients out there, when they're dealing with me, they're also dealing with Lucas, who assists with all the document collection and loan processing. I guess the key to my business is service all the way. Certainly love a challenge, which means that for those difficult type applications, finding a solution so we can produce the best outcome for our clients. So,
Awesome. And yesterday we had a bit of news. The Reserve Bank must have met or something. What happened there?
yeah, so getting used to the 6 weekly trend. It used to be the first Tuesday of every month, really easy to remember when the Reserve Bank met, but now they've changed it to pretty much every 6 weeks. They're certainly not meeting the same number of times per year, which I guess makes it a little bit more mysterious as to when things are going to change. But certainly yesterday, the Reserve Bank decided to hold the rates again, the cash rate again this month. Yeah, there's only one more meeting this year, I believe, in November. The thought is that there may be a reduction, possibly 0.25% for that one before Christmas. Interestingly, after the last couple of rate reductions, some of the economic analysts out there in banking world were suggesting possibly 2, even 3 more rate reductions in the next 12 months. But I think that that's been revised down now to probably just one, bearing in mind it is speculation and we really won't know the outcome until we actually get to the next period of time. So things are subject to change. It's very much dependent on global economics as well as what's going on here in Australia as well. So, but all indications are rates should not be going up, and if will have a little bit more easing, which generally means cash rate goes down, banks follow. A lot of pressure on the banks to actually pass on that discount at the moment. So nobody, I don't think, in banking world's brave enough to actually hold out and not pass the full reduction on to their clients.
So obviously you haven't got the crystal ball polished up, but we're thinking it's going to be pretty stable now to Christmas.
Yeah, look, again, maybe one in November. So far, the 2 rate reductions have been 25 basis points or 0.25 for each of the 2 reductions this calendar year. So the general thinking would be that it'll be another 0.25 if it happens. But certainly the Reserve Bank governor has bucked the trend a couple of times. So I think that from what I understand, she's quite conservative in her approach, doesn't want to jump in and reduce rates without being absolutely certain that the consequences of that are not going to be detrimental to inflation. And we all know how much pressure there is on housing prices at the moment, and what actually adds to that pressure is reduced home loan interest rates.
And obviously that's going to change a bit with today. There's some big news starting today. What's different in the world of home loans from today?
Well, for those of you who haven't actually heard, if you are a first home buyer in Australia, up until yesterday, there was a cap on housing prices to be eligible for a scheme that made first home buyers in Australia get into the property market with just a 5% deposit. And the government would provide, that's the federal government, would provide a 15% or up to 15% guarantee to a lender. So, in other words, for those that normally would have a 20% deposit plus their costs, well, you could also get into the market with just 5% without having to pay for lender's mortgage insurance. So that cap as of today has increased to meet the market, I guess, with increased property values. And so it's opened the first home guarantee scheme up to a lot more people. Not only does it allow people to buy more expensive properties, but it also, the scheme now does not include an income cap. So there previously was a cap of $125,000 for an individual. So that was the maximum that an individual could earn, $125,000 gross a year. And for a couple, it was $200,000 gross per year. Well, that has all disappeared as of today. And basically now you can earn whatever amount of money and be eligible for the scheme. You still have to be over 18, either an Australian citizen or a permanent resident, of course, including our people across the ditch or New Zealanders. And you can have owned a property somewhere else in the world. You just can't have owned a property here in Australia to be eligible for buying the owner-occupied property under this scheme. So it's a great one for people that are paying high rents and can't afford to pull together the 20% deposit. So, and other benefits, you will get a reduced interest rate compared to somebody who's borrowing 95% of the property value without the scheme in most cases. And yeah, it's a big saving of potentially 20, 30, maybe even $40,000 in lenders' mortgage insurance premiums as well.
Wow, that's going to be a big game changer. So, obviously, you've said it's eligible to PR. So, anyone that's moved from a visa onto permanent residence, any Kiwi on a 444 visa, or any Australian citizen. What other thing are they going to need? It's basically what? Just serviceability? Is that it? The income to cover the loan?
Yeah, so it's important to remember that even though that cap has increased, and when I say cap, for example, if you live in Queensland, previously on the Gold Coast or major centres, the cap was 700,000. It's now going to move to $1 million. So you could buy a property now, as of today, for 999,000 or $1 million and still be eligible. Yesterday, if that property was $701,000, you weren't eligible because the cap was 700,000. So that's a big deal in terms of getting into the market and actually finding a property that's suitable. But please don't be misled that you still have to be able to service the debt. So even though you can borrow more relative to the property value, you still have to service the debt. You still have to qualify for that home loan under normal lender policies. Generally, all that you do need is the identification, including a Medicare card, has been the standard requirement in the past. And I will preface this with, it's only just today being released the details of any other requirements. We don't expect the notice of assessment from the Australian Tax Office to be required any longer, although I won't confirm that until I have actually had access to the information. That was something when they had an income cap. It certainly makes sense that that won't be the case going forward. And there is a first home buyer declaration that you need to complete. And it has to be signed in front of a authorised person, such as a GP or a pharmacist, doctor, solicitor, etc. And it all goes in with the home loan application. So it's really your mortgage broker or your lender, for that matter, would look after the paperwork for you. There's nothing separate in the process that you need to do to actually get your home loan and your scheme place approved. So that's pretty much, as long as you fit the eligibility criteria. And I would encourage the viewers to actually go on to the Housing Australia website and click on the eligibility tool and just confirm that you do fit the requirements, because there are some specific questions that they will ask. And it's important to make sure that is the case before you move forward and get all excited.
Well, that's cool. And you said some of these cities have got different limits. Obviously, we've got lots of places you could live in Australia. You said there's a link there we can check on, but can you maybe rattle off some of the main limits for us? Like, say you want to buy a house in Sydney, what can they spend there now?
Right. So the cap previously was 900,000 and now it's 1.5 million. That's in the city and metro area. Regional areas was 750, now 800. So just goes to show how prices have increased in major centres, far more so as a percentage of the property value compared to regional areas or outer regional, we would say, because some regional centres still will fall under the $1.5 million mark as well. So, and Victoria, for example, theirs was 800,000 in the city and major regional centres, and now that has increased to 950.
So 950
While
in
the
Melbourne.
other areas, yeah, 950 in Melbourne. In Queensland, we're up to $1 million, and that does include Gold Coast and Sunshine Coast as well. That was 700. So WA from 600 to 850, and South Australia from 600 to 900. So it's interesting to see that it is a reflection on how much property values have increased and which cities have had the highest amount of growth that they've had to increase those caps so significantly. So obviously the likes of Sydney and Brisbane are probably at the forefront of that growth. And I will say Tasmania, just because you told me not to, Darren. So it was 600 and now it's 700, all over the place in Tasmania.
So the biggest thing that stands out that to me there is our biggest city in the country doesn't actually have the highest cap yet. Melbourne obviously is not taking that premier spot like it used to have. There's a lot of cities around the country that have got bigger limits than Melbourne.
they are certainly struggling, I have to say, down there in Melbourne, I think, at the moment with some of the issues that there have been. So, yeah, it's a slow burn down there, I think. But obviously, you know, the $600,000 increase in Sydney is testimony to the fact that Sydney is still the number one city, but it's closely followed now by Queensland in terms of the average housing prices and all. So, but it's a huge step. It does mean that the market, in my opinion, and please bear in mind everything I am saying here is from my own research, and I encourage everyone to do their own. But certainly there's going to be a lot more buyers in the market, because as a broker, I've had a lot of clients that would be eligible for the first home guarantee scheme, but had no chance of finding a property under the price cap previously. So with having these significant increases in the price cap, I think it's going to draw so many more first home buyers into the market, which obviously was the intention of the federal government in changing the scheme and bringing it up to date. But for those that are thinking of buying, get out there quick, I think, because I think
So
there's going to be
basically,
a
all
whole
your
lot more
clients that
people
had
out there in the open homes.
your first home clients yesterday here on the coast say they had a $700,000 budget yesterday. If they've got the income, they now have $1 million budget today.
That's right.
Yeah, okay.
Exactly.
That's
Now,
definitely going to put some heat in the market.
absolutely. And please do bear in mind too, one thing I haven't seen change, stamp duty concession for first home buyers. So obviously we have stamp duty here in Australia, and across the country it is state based in terms of the actual cost of stamp duty. And in Queensland it was moved from 500 to 700 on the 9th of June last year. That does not appear to have changed. So when you go over the 700, your deposit or savings will jump, because you have to cover the stamp duty that will kick in from that point. So bear in mind, it'll be at 5% plus some. There are some things for first home construction or brand new homes that have some different rules as well, but certainly for anything established. Please also bear in mind that the first home guarantee scheme is for established homes as well as new builds. So sometimes people get a little confused with the first home guarantee and think that it still only relates to the land and construction or to a new build. It's actually across the board. So you can buy in highly populated areas where there isn't a block of land available to build on. So it's a great way to get into established areas.
Awesome. So obviously a lot of our listeners are going to be in the middle of moving or they're about to move or getting ready to move. If someone's landed their job and they're on their way, can we get you to assess them for a pre-approval or assess if they can get a loan before they even leave their home country?
Absolutely. Many times now, I've actually been able to send my information across to clients that aren't in Australia and get the ball rolling ahead of time. And that just does help for planning and getting established before arrival. Generally speaking, if somebody is coming to Australia with a job, then we do need them to at least have started the first day in their role. And so long as it is a either full-time or part-time role, then generally an employment contract is sufficient. Some lenders will require a pay slip, but there are certainly some niche lenders that will actually just take the contract and just so long as there's confirmation the person started the job. If it's casual, we require 6 months of history. So you'd have to hang around a little longer for that one.
Awesome. And are there any common mistakes or things you see that people are getting wrong when they're trying to access these schemes? Is there anything they need to make sure they do? I suppose it's probably what, reach out
Look,
to someone like yourself.
yeah, look, be guided by your mortgage broker for sure, and they'll be very familiar with the process, making sure you do run through that eligibility criteria, which is just an electronic form that you tick a few boxes and it will churn out what you actually are eligible for or whether you are or aren't. And it also, you can put in a postcode. So depending on the area that you want to live in, you pop that postcode in and it will tell you which type of scheme that you would be eligible for or what the price cap is too, because there are some suburbs that you may think are major city suburbs that could actually fall into what they classify as other, which is more your outer regional, and all of a sudden, your price cap might go from, I don't know, $1 million to 750,000, which would be quite the disappointment, for example. So yeah, it's important to make sure. And again, your broker can absolutely help you on all of that as well.
So how long would this process
And please,
take? If someone was going to do this and try and get an approval on that, how long are they going to be?
how long the process? Sorry. Information to me. If we are looking at a fully assessed pre-approval, for example, it can be done in as little as a week. Some lenders don't fully assess pre-approval, so they're probably not the ones to choose for that purpose. But probably the biggest part of the process is just gathering the information, getting it in front of a lender and getting it assessed. There are lenders that are picking up within 1 to 2 business days, and generally they have it assessed within 24 hours. So, and the goal is to have a fully assessed pre-approval subject to the client finding a suitable property and putting a contract on it. And then we move on to the next step for formal approval.
Awesome. And what would be a couple of your top tips for someone that's thinking of coming here to Australia and they want to buy a property as fast and smoothly as possible?
Okay, so reaching out to your broker. Of course, I'm always happy to help. But yeah, reach out to your broker. Get all of the help that you possibly can in terms of the guidance for things like your borrowing capacity and eligibility for a loan. It goes without saying, having somebody like you, Darren, who is familiar with the market, understands the processes of buying. I'm told time and time again that the process of buying a property in Queensland is very, very different from the clients I have that come from overseas, from all over the world, and it's quite daunting, and there are a lot of pitfalls. So you can make some very expensive decisions when you're trying to do it by yourself. And ironically, even the process for buying a property in Australia varies from one state to the next. So generally speaking, the rules for purchasing a property in Queensland is completely different to New South Wales, for example, and is different to Victoria. So having people that are expert, and one of the things that we're very lucky to have is some great contacts with conveyancing solicitors and pest and building inspectors. We are the land of the termite. For those viewers that don't know what termites are, they eat your house. So it's really important to make sure that there isn't an active issue in a house before you buy it. So again, having those contacts to help. The other thing is, when you land in Australia, I do encourage people to speak to their broker before they decide to go and get a car loan, because car loans are one of the things that will absolutely damage your borrowing capacity in most cases. So before you go in there and get any other type of credit, speak to your mortgage broker, because one of the most stringent, most regulated types of lending is home loans. And while somebody might be able to go and get a car loan after their home loan quite easily, get the car loan first, could prevent you from getting a home loan. So, but yeah, definitely consult, communicate, engage a team of trusted people. It is the biggest investment you'll probably ever make in your lifetime. So you want to make sure you don't cut corners.
Awesome. Thank you for being on the show again. It's been amazing. We love having you on. I'm gonna guess you can send us through that link of where they can look to find those house prices. And then if someone does want some help, how can they get a hold of you?
Send me an email at sandra@marlunfinance.com.au, and it's Marlun, as you can see by my little logo on the back corner there on the screen. So sandra@marlunfinance.com.au, or otherwise my Australian mobile 0404 844 056. Preface that with +64, is it, or 61? Goodness me,
6-1. You've been calling too many Kiwis.
61.
6-1 for us, and you've been ringing too many New Zealand clients on
Technology in me.
6-4. Oh, thank you again for being
That's the
here.
one. I always get confused.
Remember, with our show, all of this is general advice for clients. If you need specific advice, please reach out to anyone that we've had on the show and get the correct advice for you and your situation. As always, we love having our guests on the show. Thank you for being here, Sandra. Keep in touch with Keen on Australia. We'll have more shows coming out soon. If there's someone you want us to interview on the show, or there's a topic you want to know more about, just reach out to us through any of our socials, ask the question, we'll find the professional, we'll get you the answers. We'll see you again next time on the next episode of Keen in Australia.